Lyft revealing 2027 financial targets at its first investor day this week. The ride-hailing company expecting a 15% annual growth rate for gross bookings. With more on the road ahead, Lyft CEO David Risher is joining me here in studio. David, thanks for being here.
Well, Julie, it's great to be here.
So as we were talking during the break, it seems like the market was relatively happy with the guidance that you guys gave.
Yeah.
So talk to me more about it. The 15% growth in bookings. How do you get there? Is it about taking market share? Is it about bringing on new customers? Talk to me about the path there.
Sure. So the first answer is you get there through customer obsession, right? I mean, we're a scale business. So we do 2 million rides a day, every single day, 365 days a year. And if that goes to 2.1, 2.5, 3, over time, that produces, frankly, an incredibly profitable business. And the way you do that is you obsess over your drivers and you obsess over your riders. And that's sort of it. I mean, we're looking at $25 billion in bookings over the next 3 years by 2027. And the only way you get there is just blowing your customers away.
I'm so fascinated by this because when I think about Lyft versus Uber, obviously your biggest competitor.
Who?
How are customers making that choice, right? Are they making it because they think Lyft is a better experience, or are they just looking at the apps and saying, this is the lower price, and it's going to get to me sooner?
So people do both, right? There are definitely some people who are price shoppers. There are people who are time shoppers, right? Who's faster? Right now, I'm super happy to say that basically our timing is right on. It's right on. Like, you're not going to see a big gap there. And neither with price. In fact, often we're going to be a little bit cheaper there. So that's wonderful. But I think that's just the starting point. I mean, with so much in life, you worry about price, but then you think, is this an interesting or better experience? So that's why we launched Women Plus Connect, for example, that if you're a woman and you want a woman driver, you can do that, right? That's kind of it, and that's only available on us. Same if you want to be picked up on time for the airport. The other guys might say they'll do it, but we'll literally give you $100 back if we're more than 10 minutes late for a scheduled ride. So I think after you get the basics right, you start to build innovation on top of it, and that's how you start to really drive preference.
And are you measuring how many of your riders are single platform riders?
Yeah, sure.
And is there a way of doing that?
I mean, we can get hints. It's a little hard. We obviously don't know all the apps that people have on their phone, but you can kind of get a sense, and it might be 40%, it might be 50%. Frankly, if everyone using the other guy also had us on their phone, I'd be pretty happy. So
as long as they
I'm okay
use you
with
guys
that.
sometimes. If they just have it on the phone.
Oh, no, fair enough. As long as but look, flip a coin. Use this half the time, and I'd be very happy.
The other half of it, as you talked about, is the drivers. And there you guys have made some progress as well.
That's right.
So talk me through that piece of it.
So here's the thing. In order to have a healthy, we call it a marketplace, a healthy business, you've got to have rider and driver in balance. And remember, drivers are actually our primary customers. There's 2 customers in every car. If you don't have the driver, you don't have anything. Okay, so what have we done? We've put in place a 70% earnings guarantee. This literally guarantees 100%, that every single week a driver will never make less than 70% of what the riders pay after fees, like insurance. Usually it's more like 82, 83, it can be up to 85%. And it's a guarantee. And so what that does is that starts to drive preference on the driver side, right, to choose us over the other guys. And that's why we have more driver hours than we've had in our history as a company.
And so then you get the 15% booking to talk about. So something else when it comes to the drivers, though, is that obviously regulation is something that you, and Uber for that matter, have been talking about around the country. Most recently, Minneapolis, I believe, there was sort of a back and forth about whether a minimum wage was going to be required for the drivers. I believe in the end it was not, although it was...
No, in the end we actually agreed to a new minimum pay.
Gotcha. So how do you view those kinds of, I won't call them battles, but obstacles perhaps around the country?
I'll tell you the small and then the big. The small is, I understand, look, different regulators, different cities, different states, they might have a point of view about these things, and that's totally fine. Like, our point of view there is when drivers win, we win. And it's true, right? The more they make, the more we make. The only problem that we have with that, and that's kind of small stuff, is sometimes cities and states will sort of try to go so far that they actually force us to raise rates so much that riders then suffer because they just can't afford it. So I don't like that. That's bad. It's bad for riders. Actually bad for drivers. They make less. That's let's call it a small problem. A bigger problem is there are some places that have a view that say, well, drivers who love the gig economy, and I'm really serious about that. These are drivers who say, there's no other job I can have where I can, get on the platform today, get off tomorrow. I don't have to quit if I don't like it. I don't have to go through a hiring process if I don't have to I don't have to tell my boss when I'm coming to work or when I'm like that kind of flexibility, so important to them. And I think there's some people around the world who still don't quite understand, like, this is a real thing. As I say, we have more drivers on the platform than we've had ever, yet unemployment is basically at an all-time low. So that shows you people really like it. And when people start to sort of fight against that I sort of object to, because I'm like, you know what, actually don't speak for the drivers, talk to the drivers.
There's a couple expansion questions I want to ask you. You guys are in Canada now. Your Canada numbers were really good.
Thanks.
Anywhere else?
So not yet, but I think that the fact that we're doing well in Canada is a really good indicator, because what it shows is that our customer-obsessed, kind of approach can work outside the United States. We've seen our share in the Toronto area, for example, go up from roughly 12% to roughly 30%. I mean, it's really been significant, just over 6 months. So that shows that when we really put our mind to it and focus on it, the same customer-obsessed focus for riders and drivers can work elsewhere. But nothing more to say than that.
And then the other area of potential expansion, there was one analyst earlier this year who said, oh, maybe Lyft should get together with DoorDash and do some sort of partnership for food delivery. Is that anything that you guys would consider, or are you firmly focused on being a pure play?
You know what? I think we can do both. In other words, I think we can be purely focused on a pure play, and that's absolutely right. We're all about trying to get people out in the world, connected to the world, more like that. But that doesn't prevent us from doing partnerships. Look, we do partnerships with Delta Airlines. We're not in the airline business, but I tell you what, it's great to be able to earn Sky Miles on Lyft, and it's great to be able to get a notification saying this Delta flight is a little bit late, so you probably don't have to leave for another 10 minutes. So, if we end up doing those sorts of partnerships, they're ones where they benefit both companies and they benefit our riders and our drivers.
All right, David, thanks for being here. Really
Yeah, it was a pleasure.
appreciate it.
Yeah, of course.
Thanks for coming in.
For sure.